Greetings once again from Sprott Money at sprottmoney.com. It's now the month of March. Holy smokes, where is time going? And as usual, we're going to start the month with our precious metals projections. Joining me, your host, Craig Hemke, is our usual co-host, Chris Vermeulen of the technicaltraders.com. Chris, one of Eric's favorite technical analysts, so it's always good to get his opinion. Chris, nice to see you.
Good to see you, Craig. Always a pleasure.
It is it's an interesting time to be alive. There's certainly no shortage of stuff to talk about this month. Yeah. I don't know about you. I get to go see my tax guy today, so I got that to look forward to at the end of the day. It was either a root canal or go see the tax guy. Anyway, it is tax season. Remember, as you are funding or even looking to consolidate your IRA or RRSP accounts, Sprott Money can help you with that and get yourself some physical metal stored safely and conveniently. Go to sprottmoney.com. They will tell you all about it. You can actually give them a call. Somebody will walk you through the process. If you've always heard about physical metal IRAs but have never really known how it works, that number's right there on the screen, 888-861-0775. The good folks at Sprott Money are there to help answer any of your questions about your retirement accounts in this tax season. All right, my friend. I tell you, I always try to remind people, the fun part about this monthly show that we do is you just give an unbiased technical opinion about the markets. And a lot of folks like me, we focus on fundamentals, and fundamentals, at least at this time, are pretty consistent. Okay. But at least for the metals, the technical picture across the markets, that can change day to day, almost week to week as technical indicators get violated, and everybody starts to pile in one way or another. As this month of March begins, there's a lot of worry about stocks. I did and anybody watching this can go on the Sprott Money channel and go back just to last weekend. I had a great discussion with Michael Oliver. And Michael was talking about, next big boost for gold and silver is going to be a rotation out of stocks as stocks decline. Not like, he doesn't think it's going to happen, 20% down in 3 days, that kind of thing. Just a gradual loss of confidence, shift from growth into value, that kind of stuff. So anyway, there's a link right there. I encourage everyone to watch that too. But the stock market here in early March is starting to look a little shaky. So I thought from a technical perspective, Chris, that's where we should start. Whether you want to look at the Nasdaq or the S&P,
yeah,
what do you think?
We can look at both real quick here. I think one of the key things here is obviously the technicals can flip and flop depending on the time frame that we're looking at. So I think if we look at the big picture really quickly and look at the weekly chart of the SP 500, this is going back to 2008 market top or 2007 market top. We have these waves of bullishness and bearishness when we need to be in the market. And if we were to zoom in just to recently, like from COVID to where we are now, we've got these multiple waves. And it's important to know where we stand on long-term and short-term timeframes. After COVID, we went into a bullish environment. 2022 was a bearish environment. And right now, from a long-term investor's standpoint, yes, the short-term trend is down. We're seeing lots of blood on the street right now, but the trend is still up based on long-term price action, based on money flowing still into the stock market. Still, these big dips get bought up. So it's not, the end of the world where we're at right now in terms of the market. Long-term investors can still be kind of long the market and probably anticipate some type of bounce. But as we're kind of looking a little bit shorter term, the SP 500, if we look at the daily chart, I think a very important level to look at is this low that we saw, Craig, on January 13th. This is a pretty significant standout low. And if we were to just draw a line across that, I was telling subscribers this morning in the pre-market video saying, watch for the markets to fall today. And if it breaks that low, we're probably going to see elevated volume to the downside. It's going to run the stops. There are going to be a ton of stops set at this level. And we should see that. And actually, we've seen that perfectly on the futures chart. If we just zoom out here, this is the 10-minute chart of futures. And I put a line right at that low on January 13th. And if we zoom over to today, you can see as soon as we pierced that low, the volume spiked. And this is elevated volume. It is a panic sell-off day today, meaning stops are getting run. Everybody has that very obvious stop level, and that's what's triggering today is we're going to see a flush down of high volume selling. And then we're going to see an oversold washout low, which is what I also talked about, how this is going to run the stops. And then we're probably going to see the market firm up and then have a very strong bounce. So we have the washout right now. And if we look at this daily chart, which I'll just get rid of some of these other charts here. If we look at this daily chart, here's this washout low. The market will probably close somewhere around the level it's at today or even higher for a big lower wick. And then we're probably going to see some big bounce somewhere up into these highs. So that's what I'm anticipating. But overall, I think a lot of damage has been done to this short-term chart. The trend is definitely down, and this pierce was definitely broken. This low was definitely pierced. The Nasdaq on the other side is already well below that January low. It's already broken down and had a big elevated volume sell-off, and it is really struggling. And that has to do with the Magnificent Seven, and the biotechs have been hit very hard as well. And NVIDIA, I mean, down like, the day, I think it was down 9% just the other day. It's down again today, doing a lot of the pulling to the downside. So the NASDAQ definitely has a much more bearish sign. And that is because I think the Magnificent Seven, when we look at the MAGS ETF, which is a basket of them all, it clearly had a bull flag and now it is clearly broken down. And it is getting oversold. We're ready for that knee-jerk reaction bounce. But overall, that's the big question. Is it a bounce or is it going to be the start of another uptrend on the longer term chart? And that's what we just have to let the markets unfold and kind of paint the picture for us.
A couple of things come to mind that people could watch at home. Be like, okay, that little intraday chart you showed to me looked like a little short-term double bottom with the spike down and then kind of a rolling bottom next. And maybe the S&P will crawl back above that key level that you mentioned by the end of the day.
Yeah.
That would be something to watch. But if we are shifting, if sentiment is getting bearish and it's going to be, sell the rips, kind of thing and look for lower lows and that sort of thing, what would be some things that would tip people off that that's the new trend?
Yeah, so more or less the short-term trends are down. So more or less, if we take a look at this 30-minute chart, this is a good example. This is the SPY, and I don't have it pulled up on a shorter-term time frame, but generally, the way it works is the short-term momentum, when the bars are green, it means we're in an uptrend, and you want to look to buy panic selling, you want to buy dips. But if you have too much selling to the downside, plus you have panic selling, plus the VIX spikes, plus the put-call ratio spikes, all of these things tell us that the mass psychology is changing from an uptrend to a downtrend. There's a lot of damage being done. And that's what happened. We went from green bars, bullish on the SP 500, to now we've got this SS, which is a sell short. And what really stands out is this. I have this indicator, which I call the FOMO indicator. And more or less, whenever we see this get to the blue line, the market usually puts in a high. And this is based on the New York Stock Exchange volume. This is a ratio of the up and down volume. And we actually saw that just at the open as of the day before here, March 3rd, when the market gapped higher. These gaps to the upside are never good in a downtrend. And we had FOMO buying and we've gone into another bout. So the key is to understand what everybody is doing. When the market is moving up and we're seeing everybody on the New York Stock Exchange more or less buying shares, hitting the ask. They don't care what price they get. They're not using limit orders. They're using market orders. And that's what this is tracking. And the 30-minute chart doesn't show it crystal clear, but you get the point. When the New York Stock Exchange, which is the big board, it has all the big brand names that the average Joe trader follows. And so when the volume on the New York Stock Exchange is just everybody hitting the ass, just market order, get me in, I just want in, it's taking off without me. That's when this indicator spikes. And generally that's when we put in short-term top. So the trend is down. We'll be looking for a bounce in this market over the next session or two. And we'll be looking for another spike in FOMO, which is uneducated, emotional traders who are just chasing emotions, chasing money, and really just, they're driven by price and they have fear of missing out if the bottom comes in. So that is kind of like it, from a granular level, how I like to look at it for what to go for next.
Okay. Speaking of some chart damage, gold and silver got taken to the woodshed last week. Gold was down $100, silver down a couple of bucks. Looks to my eye, the gold chart got another little bull flag going, but it's not about my eye. What does your eye see, my friend?
Yeah, I think well, gold really hit our key level at that 2750 to 2800. It had that multi-month pause. That was the big picture you and I have talked about over and over again, really for the last year, because this is a very large multi-year pattern. And now it's having that final little squeeze to the upside in terms of we're in that perfect market environment where we have chaos around the world. We've got wars, we've got tariff wars, we've got, countries trying to, all kinds of stuff going on, new president, all that stuff. And so that is feeding, I think, the uncertainty and the price of gold going higher. If we look at this long-term chart of gold, you can see we had that target up here of that 2750, 2800. We had a little pause. And I believe we're in that last little squeeze where the environment is still prime for gold, specifically gold, to keep doing really well. Typically, you get this blow-off move in gold as everybody gets really fearful. Not only that, but they also see gold leading the way higher. And so you also get FOMO. So people are scared of what's going on. Plus, they feel like they're missing out in gold. And it creates this kind of blow-off phase. And we saw that back over here in 2011. We also saw it back over here just before the 2007 major market top. Gold hits its target, but then it just keeps on going until everybody kind of piles in as like, hey, this is the crowd, this is the trade. It becomes a crowded trade. And so we're having that big kind of blow off phase right now. I think gold could go to about 3,050. That's kind of the next short-term measured move to the upside. So there's not a lot of upside, but you don't want to bet against it. And gold is by far, to me, the one asset that's kind of leading the way. I don't think you really want to touch silver or miners at this point just yet, because if the stock market does keep going into a sell-off, we're going to see, I think, those more risky and more speculative trades actually get sold into where gold can hold its value. So I like gold, bullish on gold short term, but not a whole lot of upside, in the very near future. I think it's just going to kind of grind its way up and move a few more percentage to the upside.
Okay. Before we get to the mining shares, how about crude oil? The cost of energy is the biggest input cost for the miners. If we can keep the gold price up and maybe help these miners keep their all-in sustaining costs down, their margins will widen. Interesting news. Yes, I don't know if it was rumors or confirmed news yesterday, back on Monday the 3rd, about OPEC production increases. What is that? Oh, you've got that chart pulled up. Look at you. What do you see there?
Well, I mean, oil is definitely bouncing along a very critical pivot point, a support level that it has found a lot of support. And there's two camps out there. People are like, the more times you hit that support and bounce, the stronger it gets. There's the other side of the camp that says the more times you hit it, the more you're eating away at support. I don't know what the real story is or how it works. But overall, if we take a look at it, I remember over here talking with subscribers saying, listen, everyone was really positioned for lower oil. I was really hoping oil was going to break down because I actually think shorting the energy sector stocks is actually a very good play. But everyone else seemed to be short and was bearish on oil, which as a contrarian play means the market needs to get the shorts out first. And we saw that. We had a big move up. There was news in here that caused a good chunk of this. Yeah. And there was another piece of news that came out and drove it even more. And it really pushed the shorts and squeezed them right out of the markets. Now that the market has squeezed out the shorts, got rid of them, it's back down to the support level. Obviously, it's tagged it already, as you and I are talking today, had a quick knee-jerk reaction bounce. But I think maybe this time over the next couple of weeks, it could actually break down. And if it does break down, we're going to see, I think, a very sharp decline in oil. And oil can be a very good leading indicator of what's going on with the economy. If the economy is slowing, there's going to be less demand. Plus, there's all the drill baby drill in the United States with, what is it, the Gulf of America now? So, there's going to be a glut of oil potentially. And oil is on the verge of breaking down. And what's really interesting is when we look at oil, which has been going down, the energy sector stocks, which got hit pretty hard the other day, down like 3 or 4%, they have been going up. And there's a huge divergence. I think we're going to see the energy stocks break down, have a huge sell-off. because energy prices are going to fall, specifically oil. Natural gas is bucking the trend, but it's a pretty small commodity in the grand scheme of things. But I think all this bleeds into what you were kind of getting at there, Craig, which is if energy and fuel costs drop dramatically, it is going to make a huge difference for mining stocks because energy is a huge chunk of their expenses.
Right.
So this could be very good for energy, and falling oil and a breakdown could actually give a little push and pop in the miners going forward here for a week or two.
What is that one? That is a long energy sector. Is there a short the energy sector ETF?
There is. I'm trying to think what the symbol is. ERT, maybe. I can't remember what it is, or ERY. I can't remember what it is. ERY. So here's the inverse. And so this would be the inverse of the energy. This is a 2x leverage. So, once the energy oil breaks down, this thing should probably spike and really take off.
It makes you wonder.
It's a volatile sector, though, especially when you add 2 times leverage. So
right.
People be aware, buckle up, smaller position sizes to counter the volatility.
Don't buy it and then take delivery of the certificate. Okay.
Yeah.
One of those deals. You got to stay on your toes. You're going to fiddle around with those things.
Yeah.
All right. Speaking of staying on your toes and fiddling around with those things, let's close with the mining sector. GDX got hot at the end of as companies were reporting their third quarter earnings. Newmont vastly under surprised, whatever the right word is. That's a big part of the GDX. GDX went tumbling all the way down. You can see that from about 44 to 33. Has since recovered. A bad reaction to AEM and Newmont has now pushed us back again. I don't know, Chris. I look at this and I think fundamentally there's always been a trade that's like, well, there's not going to be any more news on these babies for another 8 weeks. So let's go someplace else, and you start getting these pullbacks.
Yep.
Technically, though, what do you see there? Is there a level people should watch? If you're worried about breaking down and lower lows and stuff.
For sure. So a few things we can look at. So it has had a very nice run to the upside. It clearly broke a very significant high. So there's a lot of momentum to the upside. And when you break through resistance with that much power, usually the first pause and pullback can be bought. And this really is the first pause and pullback. Mm-hmm. It has pulled back. This is a Fibonacci retracement. So this is 38% retrace or pullback from the high. This is a 50%. So this is generally the sweet spot, the window that if it finds support somewhere along in this box, that is a very bullish sign, which means it has much higher pricing to go. So it is finding support there, and it had an exhaustion gap to the downside, meaning it opened sharply lower with people panicking, and then bargain hunters stepped in and bought it up and saw it as an opportunity. So this is a very good sign. Now, if we use a Fibonacci extension, we can actually project forward where this pattern could go. So we go from the low up to the high, and then we take this current low, and that'll show where we could see GDX potentially run to, which, as you can see, is got some potential for a pretty big move. That'll be at 44 up to about 47. And percentage-wise, that is roughly a 10 to 19% move if we can get some traction here. Now, this is a strong chart pattern. It does look like it wants to go higher. The only problem or thing that people should be aware of is if the stock market struggles, gold miners could go up, but they might be pulled down by the overall stock market falling. When the tide goes down, it naturally is going to pull all stocks down. There will be some selling. So even if gold miners are getting a surge of buying, there's also still going to be people naturally liquidating and selling into that. So I think there's upside potential. This looks like a very strong chart pattern. I don't know if it'll reach that 48 simply because the stock market, I think, is putting in a major top. And I would say this 44 is a very, very likely target. Not only is it the first target, but it's also the previous high.
Yeah.
And the stock market is primed and ready for that oversold bounce, that washout low I just showed you. So put all that together, we could see, the prime reversal in gold miners, plus the stock market in rally mode potentially for the next week or so. So GDX could have a really nice push to that high that we saw back in October.
I look at that thing and to my untrained eye, and I where you drew that line at 38, that looks like there's an old gap in the chart there.
Yeah.
Breaking down and closing below 38, would that impact your sentiment?
Yeah, it would start to do a little bit of damage, but it's still flirting with that purple line, which is that 50% retracement. And,
Yeah.
around the 50% level is still actually a very good support level. And if you take a look at, this little pause and consolidation, there'd be
Mm-hmm.
lots of volume in here. So it could come down and settle down in here. If we see a lot of panic selling and see a spike, it actually could be a bullish sign. This should act as support, and then it could actually have a stronger impulse move and then work its way up
Yeah.
that way. So, even if it fills that gap, it actually could be more of a bullish thing. But I like the way the chart looks right now. It should just hopefully just continue to run to 44 from here if this chart pattern is accurate in the chart candles.
All these moving parts, brother.
Yeah.
And you do a great job of keeping track of them all. Tell everybody about where they can find your work.
Sure. Yeah. I mean, they can go to my website, which is thetechnicaltraders.com, which you can see here. And I share my trades, my analysis. I walk through the charts just like you and I are doing right now, Craig. If you like the 30-minute chart I was showing to find out when the markets are overbought, oversold, to know when a trend is changing and understand the panic selling and the FOMO indicator, if you go to my website and go to books or just go to Amazon, Technical Trading Mastery, I show you exactly how to set up that 30-minute chart so you can find out panic and FOMO, overbought, oversold. It's all in that book, all the details, the formulas, so you can go there. And of course, if you go to YouTube, go to thetechnicaltraders.com and you can watch some of my videos and analysis there that I post every week to kind of help you walk through the markets.
Fantastic. And of course, you can come back in April for another Precious Metals Projection podcast. In between, like when I mentioned that Michael Oliver video that was posted back late Friday, early Saturday. You missed that maybe because you hadn't subscribed to whatever channel you watch this Sprott Money information. So hit that subscribe button and you'll get a notification every time something is put out and you won't miss a thing. Subscribe, like, that helps Sprott Money cast a wider net as well. And one last reminder, don't forget about your IRA or your RRSP, funding those babies and holding physical metal. How about that? Go to sprottmoney.com for more information. Chris, thank you so much. It's always so much fun and interesting to visit with you. I appreciate it. I look forward to talking to you again next month.
Always a pleasure. All right. Take care, Craig.
From all of us at Sprott Money, sprottmoney.com, thanks for watching, but keep an eye on this channel. The month has just begun. There's a lot more information to come in the next couple of weeks.